Hello everyone, and welcome to another outdoors episode of ACY Economics. I'm Clifford Bennett, Chief Economist at ACY. And it is a very beautiful day, but I have something really interesting to forecast for you today. It is now my official forecast that the Reserve Bank of Australia will raise interest rates in 2022. Now that's 2 years earlier than they themselves forecast they will be doing so. But I think the pressure is building. We've already had an international body, the OECD, strongly recommend after review that there is an independent inquiry into the Reserve Bank of Australia to ascertain and resolve its rather startling underperformance in recent years. So that's very damning of itself, so hopefully there will be just such a review. Whether there is or isn't, but certainly if there were, they would bring a lot greater pressure to bear on the Reserve Bank to do the right thing by international world's best practice standards and consider its approach to monetary policy to be a fluid one as is appropriate to the circumstances. Not one of we will do nothing stubbornly, determinedly, and even getting angry at times with commentators or journalists who've suggested that perhaps they should review that, becoming almost adamant about the fact that they won't be raising rates before 2024. All of this while basically we have high inflation around the world, high energy prices. We've had a significant decline in the Australian dollar, though it is having a little bit of a bounce back at the moment, and that decline in the Australian dollar will add to inflationary pressures. We know supply chain disruption will add to inflationary pressures, and we know that, in fact, I think I was the first to start speaking of it several months ago, the freedom of pricing now afforded to organisations from the corner store to the global corporation is also going to add substantially to inflationary pressures. So that's on the inflation side. But even more significantly and damning of the Reserve Bank of Australia is that really we've had strong economic growth, we've clearly had over-stimulus in this economy, and yet they maintain interest rates at emergency crisis levels of 1%, whilst they're undergoing a bond buying program as well. Now they may be winding back that bond buying program, but it should be just stopped instantly. Both the Australian government and the Reserve Bank of Australia have provided excessive stimulus to the Australian economy in lieu of the pandemic over COVID. We have had shutdowns, but the economy will return to growth. I forecast that growth will be below trend, but it will nonetheless be reasonable growth. Remember, the Australian economy was growing at below trend before the crisis even eventuated in the first place. So why would you have interest rates determinedly set for the next 3 years almost at 0.1% when that's far from historical averages or norms? And other central banks around the world, even the Federal Reserve, openly debating now that inflation may well not be transitory. And we forecast that many months ago that the Fed would be changing its mind. I also forecast that the Reserve Bank of Australia would eventually be changing its mind. And I'm just, I guess, upping the ante on that forecast today in suggesting to you that the Reserve Bank will raise interest rates in 2022. It probably needs to get back to 0.5% reasonably quickly, and then go a little more gradually after that towards 1.5%, 2%. If you look at bond yields in the US and Australia are really showing signs of moving towards all of their own in a free market, moving towards from around 1.7% at the moment to are up around, and I'm speaking generally, up around 2.5%, perhaps even 3.5% over the next 2 to 3 years. So there is going to be a compounded pressure on other asset classes, given that both short-term official rates will be raised and the long-term bond yield will be moving significantly higher. One of the reasons the Reserve Bank will be raising interest rates in 2022 is to head off the now obvious to everyone potential property price bubble risk that is there in the market. And also it's very clear from around the world that equity markets, particularly in the US, where despite an incredibly slowing economy as China is, equity markets continue to make new gains, and it's all about that free money from those near zero interest rates. The Australian economy until now and going forward has fared better than the US. So why we have an interest rate policy similar to theirs and why we don't have open debate about that policy in this country is really quite a startling situation and is not at all normal by global economic standards or economic community discussions in other countries. All the major economies around the world offer diverse views and active debate, sometimes critical, sometimes encouraging of their central bank. In Australia, we've been very stuck in just thinking the RBA knows what it's doing. It clearly does not, and there needs to be long-term changes in how the RBA moves forward. So hopefully there will be a review, particularly in the idea, I think, of reinstituting what historically was the case, that the Reserve Bank governor was appointed from outside the bank, and that might avoid some of the Peter Principle factors, you might want to look that one up, that have been occurring within the Reserve Bank over the last decade or two. In terms of markets, US equities still look strong, but their economy doesn't. Gold, I do like gold. Gold is a great hedge against what could still go wrong in the world economy as it continues to slow while energy fuel prices are going through the roof. That is not a healthy economic mix, and so there are risks on the economic front, but none that justify a central bank like Australia with an economy that's going to be relatively firm and with inflation climbing, when our neighbours, South Korea, New Zealand, are already raising rates, that we have this determined policy to sit on our hands until 2024. That just is not good enough. The Australian people deserve a lot better than that from their central bank. Thank you very much. Clifford Bennett, Chief Economist, ACY Securities.